The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you get the Dow down 10, Nasdaq's down 12, S&Ps are off 2.5. Gold is down 7.30 at 11.11. You get silver down 5 cents at 14.73. Actually, that's on it's 56 cents. 14.73. You got platinum down 12. The bond market 10-year off 9, 30-year off 21, and King dollars up 100 ticks. Now let's go right over to Walmart. Walmart, man, this is a trip. We're going to be watching how this whole thing shakes out. So what we had with Walmart is this, folks, okay? And, you know, I'm sure that most of you have been listening for a long period of time. Walmart is one of the, no doubt, canaries in the coal mine in a big way here. If we take a look at Walmart and we put this up on a monthly basis, what you're going to see is that you have the largest retailer in the world. It took 12 years to break out of the consolidation. Walmart had started its consolidation in 1999. The top of that consolidation is 70.25. The bottom of it is approximately 42 to 43. It goes south. It goes back and forth, back and forth. You know, bottom line is tries to take this consolidation out. It takes the consolidation out in May of 2012. So you're talking about almost 2.5 years. Takes it out, gets to a whole nother level. Now, as it gets to that level, the volume contracted dramatically. So we've been at highs of 77 to basically, well, actually, it stayed up at 88 for all of 3 or 4 months. But basically 77 to 78. Has dramatically lighter volume, up at those levels, and then what do you have? The first time that Walmart had come down trying to break back into the lower price point, bottom line is that, you know, it got down into the 67 level, rejected that level, and it stayed there, you know, basically about 3 or 4 weeks. Now we're attacking that level again. And the real key is going to be, are you going to get back inside that level and have volume simultaneously? Well, we're back inside the level now, and we have volume. The key is going to be even on the weekly basis if that happens. If in fact that happens, which I expect it's going to, because the first time we had high volume on the way down. What that sets up is that you can technically, on a technical analysis basis, you can make the case that you go back to, this is really sick, you go back to the beginning of the whole, not the consolidation, where this started from, which would be $13. Be a mind blower. My head's not in that at that particular point. Where my head does go with this, however, is that you're talking about your first leg down gets you somewhere around 57 to $50. And where I'm going with that, and this is many stocks that are out there, where that's going is that was the highs of the lows of 2008. That's where that was shaking. $60 was the high, 47 was the low. Now, we'll see how that plays out. The reason that's important is that inside the Dow, that's a decent weighting structure inside the Dow. It's the leader on the way down right now. That's down $2. You have Disney, number 2, down 142. Cisco's down 37 cents, and ExxonMobil is off 96. Putting juice into the Dow out here today is Home Depot is up $3 at 122. United Health's up 145. Big Mac's up 35, and Verizon is up 11. If we go over to Disney, we take a look at Disney. The Disney would be next. Put Disney up, and what you're going to see inside Disney, Disney was on a one-way track going higher for long periods of time. Disney gapped off its high. The high that we're talking about gapping off is 122, came down fast furious to 104. Bottom line, folks, Disney is broken right now. The thing that's amazing, too, you know, I was just listening to a couple commentators yesterday, man. They're telling everyone to buy Disney, and it's like, man, you got to be kidding me. The ESPN deal Iger himself said, hey, we get somewhat of a problem here. You know, you got to remember, Disney went one way from $50 all the way up to $120. A natural retracement will get you down somewhere into the, you know, $70 area. Where Disney is heading for right now, it's heading for the October 2014 price points. That October 2014 price point, folks, is all over the place. And that's where the S&P wants to head. That's where this market wants to head. What is impressive, okay, is how, well, there's two different ways to look at this. Yesterday, the market's down, I don't know, 70, 80 bucks, comes all the way back, has some juice inside it, gives up again this morning. That, folks, that's huge distribution. And that's the type of trading that you do get before you, basically, the plug gets pulled in an incredible way. Because what the difference is now is this, is that when you had markets that were always coming back, they actually came back, meaning that when the people that are buying the dips come in, the operators buying the dips, the funds buying the dips, when they came in, the markets came back, and they went to higher highs and higher highs. Bottom line, we don't have that right now. What you do have, the dips come in, they're buying, you get a flat market, or you're up $50 or something, and the next day you're right back down again. That is a market that wants to go lower. We go take a look at the gold contract. Let's see what where we're at. Okay. Gold contract right now is trading out at 11.11. This little baby had some great price and volume last week. Had it all. Right now, you're pulling back, and you're pulling back with dramatically lighter volume. We're pulling back with 76,000 contracts. You're going into 192,000 contracts and 194. Bottom line, you very well could be setting up a small ABC up. Your A point on this would be the 1080. Yeah, it'd be 46A to B. So even if we pull back to 1101, you're talking the next leg would get you somewhere about to 1150. That's the way this looks to be setting up right now. What it's doing is that it's building cause to get up in over the 1133 area, which was the downdraft that was created out there on the 20th, the week of July 20th. That area there is going to take some juice to get up and over. What is happening at the same time, which is really cool, is that the correlation inside the actual equities also are pulling back with lighter volume. If we go look at Rheingold Resources, what you're going to see, Rheingold's down $1.29 today. You're doing 177,000 shares. You're going into 1 million shares. You have a swing high out here that was generated last week at 65.43 with real juice in it. Right, that little baby is 1.3 million. Franco-Nevada, FNV, same type of setup. FNV, what you have with Franco-Nevada. Right now, you're trading out at 43.97. You have done 135,000 shares. You're talking about going higher at 2.4 million shares. And Franco-Nevada has already broken its downtrend, not just from the area of going of the June 18th. That broke the whole downtrend, which started back on May 14th. So the way Franco-Nevada is set up, you're at 43.97. Bottom line, 56 is game. Overseas last night, man, oh man, they just took apart Shanghai. Shanghai, folks, here, I'll show you this. This is pretty crazy, actually. It's not pretty crazy. It's just that being down 6% in one night is like a mind blower. So Shanghai, the Shenzhen was down 6.5%. The Shanghai was down 6.1, off $245. And you can see that no one can control markets, including governments. Shanghai, the first leg down took you from 51.76 to 3,300. You had a counter trend bounce. You got up to 41. You came down in 2 days to 35. From 35 to 4,000, it took 2 weeks. And from 4,000 to 3,700, it took 6.5 hours. Bottom line is that this looks like it's going to go after, and we did have an expansion of volume. This is wild, man. So check it out, yeah. So we're going to go after the lowest swing point of July 9th. You take that out with volume, and you get a monster ABC down. Your A point is 51, almost 5,200. Yeah, you get almost 2,000 points. So you're talking about 2,500, 2,300 on the Shanghai index. We pull this back, and that'll make sense because the last low out here was 1849. 1849 was hit in June of 2013. The lows of actually 2008 with 1678. So Shanghai has lower prices coming at it. We go to the DAX. We take a look at the DAX out here in Germany. What we have with the DAX, this is going to be interesting. So the DAX is building cause to break down. It's breaking out of its consolidation, man, but this is going to be dangerous. Okay, interesting. Okay, so if we take a look at the DAX topped out April 13th. That's building cause right now to basically try to get back inside a lower range. Last time it was down there, it has juice down there too. So it's real possible that the DAX is going to be... Now, the DAX has two separate areas before it really gets into a lower low. It was still to come down about 3,000 points. But the way it's trading right now, this baby wants to also get down to the... So 95.20 is the high of the October 2014 price point. 83.54 is the low. This is Tom O'Brien. This is TFNN. Dow Industrials are down 4. Nasdaq's off 11. S&Ps are off $1.50. Gold's down 7.60. Silver's off 57 cents. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 6, Nasdaq's down 7, S&Ps are off $1.50. Inside the NDX 100, strength versus the weakness. You have the strength out here is Ross Stores. That's up $1.72. Tesla is up $4.51. You get Facebook up $1.52. And on Facebook, folks, we do broadcast all the shows now on Facebook. So if you're on Facebook, come over and give us a like. It's TFNN.com, Educating Investors. All the shows are up there, so you can listen to all the shows right there also. Facebook's up $1.52. QVC is up 34 cents. Now, taken away from it on the way down, you have Micron Tech off 70 cents. You have SanDisk down 156. Avco, AV, is down 263, and Skyworks is off $1.85. Let's go over and take a look at Tesla. Tesla is a trip, man. TSLA. So this is pretty amazing how they can come out with a secondary, and in fact, the equity goes up versus going down. So Tesla's trading at 420, up 428 today. This little baby, a couple days ago, you come off the high. First off, you come off the high with juice. Okay, so this wants to go back to 236. Bottom line, you go from a price point of 232 up to 258. And what you have here is that Tesla actually is going to do a secondary. Now, all the money is going to the company. So it's a different ball game versus, shareholders getting it and all of that. But it still says quite a bit, though, about the aspect of how smart Musk is, and he bought 20 million himself on the secondary going out. It's kept the stock up. That's the bottom line. I don't think it's going to stay up. But what you do have is that equity, the percentage of, you don't want to be short Tesla, folks. The percentage of short positions in Tesla is over 24. Well, it's 24.4% as of this morning. Okay, so that means 1 out of every 4 shares have to get bought back, and all it takes is little juice on a continual basis in order to basically get that baby higher and to keep it higher. Dollar index. Let's go take a look at that dollar index. So dollar index has been failing on a continual basis to get up and over the 98 area. The amazing part is that, why? Well, why? Because, folks, you have large institutions basically selling into the dollar. That's the only reason it can stay, lower. What I do expect you're going to have is that because of devaluations, the dollar will still be the strongest against other fiat currencies. However, all fiat currencies are going to be lower. That's how this looks like it's setting up. So if we take a look at what the dollar's doing right now, the dollar's been in this consolidation at these levels since April. We came down, and we came down hard on the 12th. The 12th, we did 68,000 contracts. You went from a price point of 97.37 to 95. Now, 4 days, so 3 days of last week, no, 2 days last week, Monday and Tuesday today, it's trying to get in higher price. It is dying on the vine. I mean, big time. We've done 18,000 contracts today. You did 31,000 yesterday, so we won't even do 25 today. You're coming into that vicious downdraft of 68. The dollar is setting up a small ABC down. That's how it looks. That small ABC down will get it to the highs of the June 18th high volume swing low. That's where this thing looks like it wants to go. So it's going to be intriguing watching it, how it gets down to that level. The biggest number, of course, is that how the heck is this going on when, in fact, we know Europe is weak. You know, they're certainly not stronger than we are. But what it sets up, and this is where the wild card came in, all of it, was the yuan turning around and devaluating the yuan. If you go back, depending on whether you're a metal bull, metal bear, if you're an oil bull, if you're a stock market bull or bear, just think about how many articles you remembered that the yuan was going to take over the dollar. That, you know, whether it's Jim Rogers, there's plenty of market pundits out there saying, no, put all your money inside the yuan. Bottom line, folks, okay, you can see how this thing's playing out. What's playing out, the dollar is still going to be king dollar in the aspect of other fiat currencies. This is Tom O'Brien. This is TFNN. Dow Industrials are down 2. Nasdaq's off 14. S&Ps are off 2.5. You have the DAX off 15. DAX couldn't hold higher price. DAX trying to make a run. Couldn't do it. Be right back, folks. Stay right there.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, welcome back, folks. We have the Dow right now flat, Nasdaq's off 12, S&Ps are off $1.50, and we had a question, folks, on one of the direction shares. Okay, so let me show you how this works, because there is no doubt action in China in a huge way. And what the question specifically was does CHAD, C-H-A-D, represent the Shanghai moves well? And I will show you that. So first off, CHAD. This is what CHAD is, folks. CHAD is the direction. It's just a one-to-one short position. It's the CSI 300 China A shares. It's a daily investment tool that is 100% opposite move of the CSI 300 index. Now, the CSI is only the A shares, but I'll show you this correlation so you can see what the correlation was last night. The Shanghai, the composite, moved 6.15% down. The CSI 300 moved 6.19%. What the difference is this. The Shanghai that we talk about are the A shares and the B shares. The CSI 300 is just the A shares. That's how that works. So the correlation is there in a big way. Now, that's the CHAD. If you go to the CHAU, okay, the CHAU are the bull 2 times correlation of the CSI 300. You know, so the CHAD, 1 times 1. CHAU, if you happen to be bullish on it, bottom line, that's 2 times. And don't be bullish on the China market right now, folks. That's the bottom line. This one here had gone from 58 straight down to 21. You did a bounce up there to 35, and right now you're at 25. The CHAD, just a 1-to-1 correlation. That baby, because it was down 6% last night, that gapped higher, 2.5% this morning. This had gone from a price point of $40 in June up to $60 July, pulls back to 43. You can see how these are daily investment vehicles. And just so you understand, whether it's the CHAD or the CHAU, what you are doing, you bet is that, and I know plenty of Tigers, you know, up and down. That's pretty cool. Yeah, look at that. And one of the Tigers just put up the D equals down, U equals up. That's pretty cool, yeah. Just be cognizant of the fact that all the movement will be done on the opens, because what you're actually doing is that you are trading the Shanghai market and deciding what you think the Shanghai market's going to do. Now, what's really cool about that, actually, if we bring this up, so watch this, if we actually bring this up. So we bring this up. Let's see. And last night, I'll take Shanghai up. We had the expansion of volume. You know, you're at 37.48. You know, next swing point is 35.32. So it's like, okay, that's another couple $100 down. The probability is that you're going to go after that, number one, but you very well may go all the way after the 33.73, which would be another, well, that'd be insane. That'd be like down 12. Yeah, it'd be like 12% in one night. Hey, listen, man, it can do it. You know, Shanghai is out of control. That's the real bottom line. They get huge problems, and those problems, folks, okay, basically are going to come home to roost all over the place. Let's go to Lou in Nashville. Hey, Lou, what's going on?
Hey, what's happening, Tom?
I'm doing great, man. How you been?
Great, hanging in there.
That's a beautiful thing.
Hanging in there.
So you want to look at Nugget?
Yeah, that's right. I was in it, and I got stopped out at a profit.
Okay.
And I was just wondering when to get back in again. If
This is pretty cool. This is so Nugget, folks, is the Direction 3 times exchange traded fund. Looks for a daily investment vehicle. It's a daily investment vehicle. And remember, so folks, you can come over to our website at TFNN. You can see right in the very top, ETFs. You see 3 white papers there, how these leverage products move. They compound on the way up and they get defensive on the way down. And these folks, they're really sweet when they're at $4 or $5. Okay, I really like them. They don't stay there long because most of the time that they're going to do splits when they get that low. But if they can get back up to 7, 8 pretty quickly, that's nice. 14, 15 is cool. When they get to 30 or 40, that's when you got to really watch out. Meaning because the moves are fast, furious, and all the above. Because you got to remember, you're just compounding numbers. That being said, I like this setup, man. You know, it's a small ABC up. That's what it looks like. You get 289 up to 487. So you got what, $1.90, 375, 475, 565. Let me just look at the gold contract for a second here.
okay,
And see. Yeah, this is on right now. Look at this. Just when we started the show, it was down $7. Now you're down $1. The game's on right now.
great.
I wonder what just happened. Something just happened. The gold just went from, but see what, NUGT, this is pretty cool, folks, okay? So gold just went up $7. Now, this just went from 383 to 417, but you can still see that, hey, that's not a big deal. That's not the end of the world, man. I mean, you know, so you break this 478 with volume, you get a small ABC up into the $5 area, which is percentage-wise, of course, a huge move.
Great, great.
Cooking, brother.
Hey, what about the SPXS? I've been playing that too.
Let's take a look at it. This is a good move. This is the Direction 300% correlation of the daily investment move of the inverse of the S&P 500. The low,
right.
Yep, the low is 1698. The high is 30. When you take a look at this baby, it's not a question is, do we buy it right here? Okay, well, let me just see something. So this wants to go back to 1885. Here it's 1785. What I do with this is that when I'm trading this, and I like trading this, but I bring up the futures first. So, okay, so what I would do with this one right here, I would just wait. The last bar that we had up here at like the 2099, that looks to me like it wants to be tested. Let me put up the SPY in case if you folks that are using just the SPY, what you do. Yeah, I'd buy it. I'd buy it because when you pull up the SPY, what you have is this. It can't handle 210.59. You're at 210.41 right now. Yeah.
Yep.
That's
okay.
right. It's ready to go, man.
Okay, great, Tom.
Okay, man. Have a great one, man. Have a safe one.
Yep.
It's going to be a wild day, folks, because we're going to get some volatility coming in this market, because with what is intriguing in this market here, meaning in the metal market, this is the first time that I remember in almost 12 years that the correlation in between the S&P and the gold stocks is basically not there. Now, that would make sense because the gold stocks and silver stocks, they got killed. But that's encouraging in the aspect that as markets were moving lower, these were not moving lower. In fact, gained the most amount of strength last week. And last week, of course, the market came back, there's no doubt. But what happens on a longer period of time, what you see is that when the markets, let's say the S&P come back, bottom line, gold and the gold equities already had this strength into them. They pull back slightly. Guess what? We're still at the same place in the markets. The markets are still threading water, where it looks to me that the gold, silver, the gold contract itself is off the bottom. Now let's go take a look at the silver market. It's amazing what they can do at silver, man. This is crazy. So silver, folks, they took back 45 cents today in one swoop. You get 44,000 contracts, you're going into 55. Silver's going to be a close one. That's a close call. That's a close call. We'll see whether we get this this pure rejection. If you get this pure rejection, you know, then you get some action. But silver, there's no doubt that they love taking that thing apart. The silver's down 2.9% right now. Copper's off 1.3. You get gold basically is flat. Silver, sugar, crude oil. Let's go to crude oil. So crude oil was up 0.7%. You're dealing with 42.72 on this contract. Got to another lower low out here today. Man, this has been a one-way trip on crude. Crude, $62 down to 42. 41.94 actually. We'll see if we can get some action. If we go take a look at the XLE out here. Oh, I like how this is setting up. This is going to be interesting for the Dow Industrial stocks. A couple of the big integrators. This XLE is a pretty good setup. You came off the bottom of 66.29. You go top side to 70. Pull back, lighter volume. Let's see what Exxon's doing. Yes, the Exxon still looks weak. Chevron, something strong inside that XLE though, and Chevron doesn't have it. That's really intriguing. So you get the two highest weighting. So the key when you have that, so check this out, folks. The XLE looks good, all right? ExxonMobil, Chevron didn't look good. Don't buy it, okay? It's that cut and dry. Why? Because Exxon and Chevron, I believe, are 25% of the XLE. 27.7%. Yeah. So there's evidently a few other equities that do look good in there, but one will drag the other one down. If until ExxonMobil and Chevron pick up their head, that little baby, you know, will have some good bounces. But as the juice, it just won't do it. Let's go back over to that gold market for a second, and you're going to see that it looks to me like we got small ABCs setting up, man. This is going to be a trip, man, because you got to remember that an A to B move is a straight line move. A B to C goes all over the place. Now, we've only consolidated for 4 or 5 days. If this is the C to D move coming up, that's another straight line move in the marketplace. And the way that gold just moved off that low, it looks to me that the volatility is going to be there, and it didn't take much for that contract to just move up those $7. On a daily basis, it's set up really nice. On the intraday basis, someone came in, so picture this, someone just came in and bought 10% of the whole contract value. That was one trade. It was 9,000 contracts. We've done 90,000 contracts, but that was 9,000 contracts. Boom. That's where it took it from the 08 level up to 11.17. And most of the time, you're not going to see an operator come in and just do that once. It's going to be once, twice, 3 times. There's an operation that's going on there that wants to get it up and over that 1133. Once gold's over that 1133, and that's where the severe downdraft had taken place. The last severe downdraft had taken place. You can get some action going there. Some of the high volume stocks in this market out here today. You have Bank of America is up 4. You got Facebook up $1.32. Walmart's down $2.17. Walmart's going to be a big problem out there. Home Depot is up $3.70. You go over to Home Depot. This thing's been on a tear, and it's going to go up a lot further, too. You got price with it, volume with it, all of the above. If we take this and we put this on a weekly What we got, let's see. So weekly is 22 million. Yeah, this is, it's going to be wild. It's going to be an ABC up, man. What a trip. So your 8 point on this would be 83 to 117. So you get, what, 25 bucks. 131. This thing's an ABC up. That's what it looks like. You're taking your B point out, and you get some juice behind that move. Let's go to Carlos in Garden Grove, California. Hey, Carlos, what's going on?
How you doing, Tom?
I'm doing great. How you been, man?
Oh, I'm well. Thank you very much.
Good. How are your kids doing?
Oh, they're doing wonderful. Actually, I have my oldest daughter graduating next year from Fullerton University, so I'm very happy about it.
That's awesome, man. That is so cool. Awesome. So what are we going to look at today?
Actually, Tom, I need your help managing EDC. I have a position with 50 shares because this morning I sold another 100 shares that I had at a full position of about 150.
Okay.
And these shares now are free shares. And I need your advice about it because I've already took profits and I'm leaving only 50 shares on the table.
So let's take a look. This is a direction 3 times bear of the emerging markets. And, these are daily investment vehicles. So he's on the right side of the trend. I mean, because the trend has been down dramatically, versus our markets. And so this equity has gone straight up. And this is how this gets intriguing, folks. With any type of leverage product, direction shares, pro shares, when you're actually that you have them trending and they're compounding on the upside, it's a very fast compound. Just stay right there with us, Carlos, all right?
Thank you.
I'll be right back. This is Tom O'Brien. This is TFNN. Dow right now is up 5. Nasdaq's down 13. S&Ps are off 1. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We're talking with Carlos from Garden Grove, California. We're talking about the EDZ, folks. EDZ is a 300% inverse correlation of emerging markets. You know, Carlos, this is a tough one because these are daily investment vehicles, and you got it right. In each one of these days, I mean, you've been making money hand over fist. Bottom line is I'd sell the other 50 shares. And this is why, right?
Okay.
I've done the math behind each and every one of these legs up, and it all says, yeah, we'll just do it. Let's do it quick right here, okay? So if we take the bottom leg, like we just start like at $26 May 15th, you get 26 going up to 33, so you get $8, right? 8 onto 29 equals 37, okay? So next leg, where'd it go? It went to 40, right? But then if I take that leg from 29 to 40, right, you get $11. Next leg was 33 to 44. It's like, man, and you do have volume dropping off. Do you know what I'm saying? So it's like you always can do more than a 1-to-1. You know, there's no doubt about that. But it's like with this, there's no reason not to take it because it's all profit for you. So you're going to put $2,200, $2,300 in your pocket. And, you know, this can pull back, you know, to $40 real easy, man. And it's always nice to having the money in your pocket, man, with a profit. I know you worked a little butt off for it, but the math works, meaning that there's too many confluences that you got what you're supposed to get out of that. That's the bottom line.
Beautiful. Well, thank you very much, Tom, and have a nice day.
It's so great hearing from you, man. Have a great one. Have a safe one.
And remember, I'm always listening to you, okay?
Listen, man. I remember the first time you called with that story, man. I loved it. It's impressive, man. It keeps me going all the time, man. It's what life's about, man. Totally.
Thank you. Thank you. You're my inspiration, man. Thank you.
Thanks, Carlos. Have a great one, man. Have a safe one. It's so cool, folks. I mean, if you years ago, he called. I don't believe he brought his kids here. Didn't speak English. Now look at him. He's conquering the markets. Gotta love that. Oh, yeah. Okay, what's happening with these markets? Let's see. With Dow, someone put juice inside the Dow, but it's probably Home Depot. Let's go take a look at Dow. So Home Depot is up, $4. United Health was up 2. You got McDonald's up 76 cents. Chevron is getting some juice under it, up 50. Walmart is taken out of it. Walmart's going to be a huge problem for the Dow, man. It's just a mind blower. Let's go over and take a look at Amazon. If you Amazon's still hanging up there, 538. But evidently, Walmart came out with the numbers. Numbers weren't bad, by the way, okay? But bottom line is that the market didn't like it. Market sold it down. And what you're going to see, it looks to me that little by little, Amazon is chipping away at everyone. That was quite an article that the Journal had done. I think it was the Journal or the New York Times on Amazon. And Bezos is out there. He's going to be defending it. But there's no doubt. I mean, to grow like he's grown, that's definitely a different animal. That's different DNA, different animal, different all of the above, different way of thinking. Volume-wise out here, let's see what we have right now. We are at 190 million, so that's going to be light on the NYSE. And NASDAQ's not, though. NASDAQ's 438. Let me just look at this. So it's going to be important to see how this NASDAQ shakes out, because the NASDAQ the NASDAQ looks like it does have a little bit juice into it. Gold, something's moving that gold market out here. It looks to me like we got a small ABC structure happening on the way up. You stay right there, folks. We got our man, Mr. Basil Chapman, coming up next. Then, of course, we got Kevin Hinks, TD Ameritrade Thinkorswim, Steve Rhodes, Dave White, and we'll be back this afternoon, folks. Have a great one. Have a safe one. Stay right there. Basil's coming right up. Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.